This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Well, a lot of YouTubers have been singing the blues and crying in their beer, while I, meanwhile, have been taking it easy, watching my commodity stocks, which are not appreciated because most of the YouTubers, with a few exceptions, have not lived through trading in a inflationary market. And it's like a flashback to the past, or a flashback to the future, or something like that, to be doing this again. But a commodity market like this, you want to buy stocks that are identified with commodities, things that people use, things that companies make, things that they can turn a profit on now. It's not about future growth. It's about what can do well right now. And the war in Russia and Ukraine has just exacerbated this situation. And you return to your caveman existence. You don't think of growth companies so much. Instead of thinking of Starbucks to get coffee, you make coffee at home because it's less expensive. And so what's the thing to do? It's not to invest in Starbucks. It's to invest in coffee as a commodity. And I'm going to show one of the ways that can be done as part of this fund's goal. But also, gold has been looking mighty interesting. The gold fund I'm going to talk about is a double leveraged gold fund, and it's a bull fund. So for every dollar that the gold miners index goes up $1, this fund will go up $2. And it's the Direxion, you spell that Direxion, gold miners fund, and they follow a gold miners index. And so when that index goes up $1, you'll make $2 because it's double leveraged. And I think gold has been playing around, but it's starting to make some moves. I noticed the price jumping a little bit here and there. I think it's getting ready for takeoff. And so I bought a significant amount of this fund, and its symbol is NUGT by Direxion, double leverage bull fund on the gold miners index. So I bought some of that double leverage gold fund on the gold miners index, and it's started to take off a little bit, but I'm still watching it. I'm going to act accordingly. I think it's a matter of time with gold. It just has to be the right time. The other one I'm looking at, I haven't invested yet, but I'm seriously considering it, is a diversified agriculture stock. And this is just this isn't leveraged, and it's a bull fund. It's a dollar for dollar bull fund on diversified agricultural products. And again, to illustrate the difference between growth times and inflationary stock times, and times when interest rates are rising. During growth times, you think of buying things like McDonald's. During inflationary times, you think of buying the cow, literally. And so this diversified agricultural fund, its symbol is DBA. That's D as in dog, B as in boy, A as in apple. So this DBA double leveraged fund does basic commodities such as coffee, sugar, corn, soybeans, live cattle, and lean hogs. So I created a little chart to show you how these funds have done over the last year and over the last month. And for the last year, the Direxion Daily Gold Miners Fund has largely done nothing until about the last month. Okay, and that's why it's caught my attention and has caught my screen's attention. The other one the agricultural fund, the symbol DAB, that has gone up more gradually and more predictably. It's probably the more comfortable one to own because it's not leveraged. It's not as risky because it doesn't have leverage. When you have leverage, you're taking the risk because you're going to double your gains, but you can also double your losses. So the agricultural fund, I see that more as a long-term thing, and the other one, the NUGT, that's more a hope that gold's going to catch fire and go wild. Okay. Thank you if you've been able to take this all in and can use it and consider whether it fits your own situation. I don't give investment advice because I don't know your age, your situation, what you like, what you don't like, that sort of thing, and all of that is important. So I throw these ideas out as things that I'm doing, that I'm considering, that maybe you want to take a look at, maybe you don't want to. But at least you can follow my thinking, and maybe it'll help you to understand why am I trading stocks a certain way. I try to give some of my philosophy, and that philosophy is getting more solid as we go along because it's clear to me now that we are in steep inflationary times, at least for a while. And it's going to be that way for a significant amount of time. And so we need to adjust and adapt. Other than just taking it in the teeth, insisting I'm going to buy growth stocks and keep buying and keep buying and keep buying. Why? Why not wait for conditions to improve to the point where it makes sense? And that's what I'm all about. And hopefully I make some sense to you as I do think these things through. And I'm a short-term trader, especially when conditions are like this and they're so changeable. But if we get into a long-term bull market again, I can be a long-term holder too. It's just I'm not going to sit there and take it in the teeth over and over again. Okay, that's not me. I like to make money. I don't like to lose money. Okay, and I think I probably share that with most of you. Thanks for listening and watching. Be sure to like and subscribe, and I will plan to see you in the future. Thank you.